Okay, good morning. By my watch, we make it 10 o'clock. It's Friday the 29th of May, and this is FinTech Friday. I'm Mark Johnston, Event Director for Next in Tech, the organisers behind FinTech Friday. Today, we look at the future of AI in financial services. For those of you familiar with the format, then thanks very much for tuning in again this week. We really value your contribution. For those first-time visitors, a short word on general housekeeping from us. Please ask our panel members questions using the Q&A button at the bottom of the screen. You can also upvote your fellow participants' questions here, should you wish. Use the chat function below to make contact with your fellow audience members, make comments, and spark debate. At FinTech Friday, we encourage opinion, debate, and a sharing of ideas, but please respect this as a professional forum at all times. Right, enough from me. Let's get started for today. Your chair for the session of FinTech Friday is Sarah Wrench of Avanade. Good morning, and over to you, Sarah.
Hi, thank you, Mark. My name's Sarah Wrench. I'm one of the Global FS Directors, Financial Services, for Avanade, specializing in data analytics. I'm very excited today because I'm about to hand over to some fantastic panelists, and we're obviously going to have a debate. Day to day, I'm obviously not normally a chair. What I'm normally doing is building AI technology for various banks, financial services, and capital markets clients across the globe. But further ado, I want to hand over and introduce my amazing panelists. And let's start, please, with Swati Kauri.
Hey everyone, I'm Swati. I'm the Change and Transformation Lead at Maurice. So at the Challenger Bank, AI and data-driven banking is the heart and core of what we do. So I'm super excited to share more with you guys.
Thank you, Swati. And Nidhi, can I please introduce you?
Yes, good morning to everyone, actually. This is a great opportunity, and thanks to Mark. I have 18 years of experience. I've been with AIMS at Bank for almost 18 years, yes. I've worked in risk, technology, and institutional banking, and my background is on solid data analytics. That's what I've done. I've led teams in that space. I'm currently the advisory board member for E2W, which promotes women in finance and reduces the gender balance in the industry, which exists a lot in financial services. I currently do partnership with the fintechs to provide solution to the financial services. So getting the challenger banks to the main banking domain players. And I work with the solutions that use artificial intelligence to bring value to the current existing platforms within those banks and generate value, either bringing by cost efficiency or finding out new realms of business. Thank you.
Perfect. And for our final panelist, Ajay, please can I get you to introduce yourself?
Yes, thank you, Sarah. Lovely to speak to you all. Good morning. I work in BNP Paribas in a group function, and my role is running AI and digital risk analytics for the BNP Paribas Group. I've been in analytics since the start of my career, currently focusing in BNP to rationalize and steer the responsible and secure use of AI, data science, and also platforms across the group. In the past, I've been with Deloitte, with EY, worked in forensic data science, across data science, essentially. Started off my career as an entrepreneur. I was focusing on edtech and nanotechnology, and then eventually worked for a few years in marketing data science. Thank you.
Perfect. Thank you, Ajay. So we want to have a very open flowing discussion. So we have got a list of questions, but if anyone on the chat wants to raise a question at any time, feel free, or even contribute to the dialogue, please do. I'll happily read out with James also the comments that are shared so we can add it to the discussion. So as an opening question to the panelists, should we start with the debate, why is AI revolutionizing financial services? Don't all jump in at once, but anyone want to start?
I guess I can give it a start. So I think especially for the new fintechs like minis and challengers, right? Our journey started with app-based banking and financial services, and data on cloud was the heart of what we do. So the next natural step for us was not digital transformation, but understanding how do you use that data now effectively to create better customer-centric services, to achieve operational efficiencies, and to start offering services which customers value. And I think what I guess a lot of fintechs have now proved is that there is a need in the market to offer more and more personalized service. And we've actually gone into the stage of hyper-personalization where customers want and have a desire to see more every specific service chat customized to their specific need. And that's where I think AI comes in very significantly, that especially when it comes to money, everyone wants to know that they are in control of their money, they are getting the value for their money. So I think it's just offering those kind of services around.
Yeah, and you can certainly see with like Moneties, it was one of the disruptors in the market compared to traditional banking and things like that. And what about Andrew or Nidhi? Any thoughts?
Yeah, I think I want to take a few steps back for your audience as to, because the question you really asked is, why is AI revolutionizing financial services? So we have reached a critical stage in financial services where, what does AI need? You know, it needs a great data quality and a good amount of data. And we, with 150 plus years of operation in the financial services, we already have that. In fact, we have more data than what's required. But we have reached that critical stage where financial services have realized, it's an inner realization for our industry, that data is a calling card. And with subsequent growth in machine learning, you know, when I did my engineering, we used to study machine learning, and then it sort of dropped the ball in between, and I don't know what happened. But now it has again come up, especially with the rise of the neural networks. So that's another data point that's fueling this growth. Then the processors in our systems that we use, especially the graphic processor units, so the GPUs that, you know, from NVIDIA, very famous, which used to use, through AI within the domain of deep learning, the infrastructure companies have realized the hidden value in having GPUs, and that's actually funneling the pace at which you can actually build your neural networks. So the speed, the data, the context and connectivity between the information is leading this within the financial services. And we see this in the last 3-4 years. If you see, we really started hitting the ball game with the high frequency trading. It's all algorithm trading. We want to take away the nuances of human intervention. That's where we started seeing the value. The other aspect, and I think a very strong independent field that supports AI is the nature of the open source. So we have got coders, we have got developers, we have got infrastructure, we've got platform providers coming from a very open source background of coding and sharing. You know, sharing is caring, and that's the kind of ecosystem we need within financial services, because we're a highly regulated industry, and we need all the support that we can from different players. And our industry provides very specific business cases for AI to be successful. You know, AI can solve a lot of problems. It cannot solve a lot of other problems, but what can it solve? We have very specific and perfect, and I would say in my language, beautiful cases to solve those problems, especially where AI stands very strongly on its 2 feet is monitoring, surveillance, and transactions. All these are beautiful data stories, and we have got good cases for them. Our algorithms run good on that. We have got good successful rate of that. I think that's what is funneling and fueling this passion within our financial services to actually take note of AI. That's my view.
Brilliant. Yeah, and I definitely echo that as well. And Andrew, what about your thoughts?
I forgot the actual question. Was it why AI is becoming pervasive in financial services?
Yeah, how is AI revolutionizing?
Oh, yes. So a couple of areas actually, there is success, and there are a lot of areas where there hasn't been. I'll talk about maybe cyber fraud, or if you consider, AML or screening of customers, it's essentially a cost exercise, and you've got rich data. Rules are not going to help because you have to create rules for most of the data points of the population. So AI or data science helps in that, but the point that Nidhi mentioned is the cost of processing has really gone down, the cost of storage has gone down, and that has been, and essentially also one of the key drivers are the access to tooling, which is essentially programming languages, has become way easier than it was a few years back. So literally, and also if you think about the educational place, now you don't have to really go to universities to pick up probably good courses. So there is also there is an inflow of talent, which wouldn't have been probably possible earlier. So that is leading to the cost basis falling down. And on the success and failures, I think the failure point is important to say. Last 10 years, I think the industry spent on big data, or they used to call, big data is going to solve all the problems. Now the focus has more shifted towards AI. And I personally believe that there is a lot of hype around the AI context, but there is also a possibility when you can use the prediction from AI systems for prescription to decision making. Now, from a maturity standpoint, I see a lot of people asking good questions, and then they're building good predictive systems. So it is the maturity I am seeing in some cases. In some cases, it's still early days. So that's my observation, and I think that that's a proxy to the pervasiveness of.
I think, Sarah, I want to add here for the benefit of the audience as well. A lot of people ask these questions as to where can AI be used? And in financial services, you need to find a really good business case for using it. But there has to be a yardstick, and I'm sure some of you will agree on this, is from what we have learned so far in the good business cases and success stories. When we start small, we reach success sooner. If an activity from point A to point B can be done in few seconds of a human thinking time space, it can be converted very well into AI. But if it entails a lot of conjunction and collaboration and analytics of different aspects, which a human mind does, it becomes a difficult story to crack it case by case in AI and takes longer time. So I'm just leaving this thought for your viewers to comprehend, because there's a lot of story about AI is going to take away all our jobs. That's not going to happen. It's not happening at the moment. But what is it that AI can do and cannot do? And Adri raised a very good question, because when we start doing it, we realize that we break our head against a wall. It's really important for us to know what is it that we can do within few seconds of thinking if a task is to be done, and start from there, start from that deep, incisive automation, and you will have wonderful outcomes which can actually help other problems.
If I can add a few things, I think, to what Nidhi and Adri say, right? And with specific examples, at least what we are doing in Minis is customer service with chatbots. It's a great way to allow that we have an always-on agent which can speak to the customer and then aid the customer service teams. But then we balance it with a global network of human linguists, because we want to offer customers a very local service in their language, and then coupling the combination of the resourcing, the SMEs we have with the AI solutions, right? That's where every company needs to find a sweet spot to offer the best customer service. Fraud detection, I think Adri also already mentioned, is a big area, which is again very data heavy. I think just one specific example, because I see a question on financial inclusion as well, and which is at the heart of Manisa's, right? So most of Manisa's customers come from migrants or are the underbanked people. And the challenge we've always had historically with such population is there is not sufficient data points available to verify them. And what AI offers us, the combination of smartphones and AIs, it offers us these alternative data points, which we can use to verify the user's identity, to credit score them better, and to even go to the extent of offering them personalized service. So, and again, a good example is when we looked at our gig economy users, there was a realization that for most of those people, it's not their expenses are greater than revenues, it's the fact that the cash flows are uneven. And so what they need is not necessarily a credit product, but something of a sense of a salary smoothing product where they get their salary smoothened into even cuts, right? And these are the this is the power of AI we are talking about, not just using and doing operational activities like like fraud detection, but using AI in the harder core of every strategic decision making you make, launching the products, tracking them, and then customizing them throughout the journey.
Yeah, and I think they're all really great points raised, and I think just closing perhaps on the fact that data is available. Obviously, AI then enables us to help build on the strategies that many banks and financial institutions have, which are, improving customer insight, customer experience, and data monetization is now being explored, which is something AI enables us to do. I can see there was also a great question in the chat about our neobanks, i.e. fintechs, going to replace traditional banking. Does anyone want to give some thoughts? I know we've got both sides of the coin here, from someone from banking and someone from a fintech. So I don't know if anyone wants to give a perspective.
Yeah, maybe. I think I would like to start this because this is a question I deal a lot with, coming from from a bank. And this is my view. It may or may not hold true for everyone, which is where everybody else, Adri and Swati, can pitch in. I think fintech is creating a level playing field to reduce the pie for the traditional bankers. And at some point, they will both create a coexisting ecosystem. That has to happen. The computational strength, if the traditional banks do not operate or invest in computational capacity building in their infrastructure, the fintech will continue to take over the pie from the share of the traditional banks. But if the banks don't want to invest in computation, but they want to invest in something called data science, which is completely different. It's like finding out the value from your existing data and what can be the most beneficial thing for the traditional bank to go forward. I think they can have a balancing act to do that. But in between this whole ecosystem of traditional bank, fintech, banking tech, whatever you call it, banking will stay. Now, who operates it and how do they operate it? That definition may continue to change. And us as industry, our change takes very slow pace for the traditional banks. So pace is important for the traditional banks. But I believe it's a trust game. Now, AI has already got a lot of throwbacks coming from, because the decisions are black box model based, people are already clamoring for, well, we are a highly regulated industry. We need to have explainable AI. I should be able to explain why a certain decision has to be made, because that's what a human being would be asked to subscribe to, especially if you're in a credit risk management space. You have to explain why a certain lending decision is being made and why it's not being made. So the game to play is to remember that whosoever has to take a bigger share of the pie, whether you're traditional or not, is that you have to keep the trust of your customer at the center of your solution making. What do others say?
Yeah, I think I do agree that it's a coexisting ecosystem, right? And then I think my understanding is more towards that, especially with the COVID-19 situation, right? We're going to come out and see a lot of fintech admin banks forming more and more closer partnership, because what this scenario has taught us that fintechs and neobanks have a natural strength in being very agile and adapting to the market and customer need really quickly. Where they lack and where the big banks are more efficient is operational resilience. They have a very standard operational presence. They know how to manage in these scenarios better than the fintechs. So I think it's just understanding mutually that there are benefits both path offers, and some of the best form of banking services you're going to see over the coming years is going to be where we start seeing more and more partnership coming between neobanks and the traditional banks, keeping customer centricity at the heart of all of it.
Yeah, I'll just add to a very minor point. In the past when I was in consulting, I helped a large bank to build a neobank-like proposition. And in our current bank, we have also similar acquisitions we've done in the past. So I see it as the neobanks has been trailblazers in how they create the information architecture, how they distribute their products. The existing institutions are transforming towards that. There is obviously inherent inertia, but at some point, that's what the customer demands. There will be few companies or few banks which will not be there as they are today. They will transform or they will not exist. But the business, the franchise, a lot of the existing institutions have is not only retail banking. They do more complex financial products they offer, which is not going to be, it can't be replicated so quickly by companies which are mostly focusing on great customer experience, great information infrastructure, and something which is operationally much more cloud native from my IT infrastructure standpoint. So I see there will be a ecosystem play. Maybe some of the big banks will buy the small ones. The key point is the interest rate has been low for a long time. It's going to be low for a long time. So in retail banking, how do you earn money? By customer deposits. So if you're not making money, how much will you? How long can you go by by venture capital? It's difficult, in my opinion. So that's my observation.
There's some brilliant answers there. I think what we might do is then move on to the next question, just to allow it, and because I think it linked quite nicely. What are some of the drawbacks focusing on AI technology? And I can perhaps open just to give examples. Obviously, with COVID, consumers changing their behaviour. This meant that actually the existing models that were in place surrounding tracking credit card fraud and things like that were no longer valid and had to be retrained using a newer data set. Suddenly users went from buying, everyday items when they're out and about to increasing their online consumption. I don't know if other people on the call have other examples of where you can think of some drawbacks, whether relating to COVID or completely separate.
I can. Shall I start? I'll start.
Yeah, go ahead.
Perfect, Ajay.
So AI as a technology can be used for good and bad. We all know it. From inherent drawback on the techniques is one which Sarah is rightly pointed. That is, if you're training on data set which represents the population in the past and the future is quite different, you will not get good outcomes, not good predictions. And then if you're making judgment based on that, you'll make wrong decisions. So that's one. The second one is obviously the consideration of trust and data privacy on AI systems, and that is not inherently bad for AI, but data, which is the fuel for AI systems, there is progressively, as we all know and we read, there is a demand by consumers, by regulators, that we have to embed trust and responsibility in the AI system. So if it's not done responsibly, or if you're not using the best practices on considering privacy by design, at some point there will be, I wouldn't say backlash, but you need to retract. So doing AI in that way is important. Those are my 2 points on what I think is bad.
Thank you, Ajay. Anything else from Nidhi or Swati?
Yeah,
Go for it.
Sorry, I was reading the question one. Karthik would has written that how have you overcome data quality issue when implementing solution, and this ties rightly into the drawbacks. So AI is as good as your data is, especially if you're using supervised method of learning. So I want to draw this conversation back to your strategy, especially in financial services. I see this happening a lot, that we want to just rush through this AI bandwagon without any strategy, and that is sort of hurting us a lot, because not all data is useful. It's not. There is a lot of insufficiency in the data that we look at, a lot of mislabeling in the data. Like Adri mentioned, the training test data, training data, second level validation data, we find a lot of ambiguity in that, and it sort of will send you on a different path altogether, and you need to then retract from there. So agreeing on a reasonable level of accuracy of finding this right cohort of data and feeding into the initiative that you have picked up is really important. Remember that AI is not 100% accurate. It's a game of probability. It's your response to an outcome that you want to accept. So your acceptance criteria should be very well defined. If your data quality is not up to mark, then I don't know why you would even start to think about AI. You need to first get your data strategy correct in your, in your function or your business unit. You need to really start from the start, and that's a different conversation altogether. But find what you're trying to solve. For it to not to have many drawbacks, find a way that what is AI trying to do for you? Are you trying to play a cost saving strategy, or you want to generate high value, or you want to target completely different market? Knowing why you do that will help you understand what data you need, why you need that, what kind of quality is acceptable to you, and then build on that. I think that's a small piece, but it's a very important building block. You can't jump from the first step to the 10th step. It's not practical, and you will have lesser success, maybe more flukes. But that's my experience. I mean, people can have different experiences, but that's the other thing, especially with having insufficient data and hitting into bias space is you need to retract a lot and then maybe buy external data. And there are different fantastic companies which do that. You can go to their sandbox environments, play with their API, play with their data to find out what you want to do. So I would rather say, go do that, invest your time in that, rather than start building up your team and spend your money, because we all have limited money in our kitty. All organizations have limited resources. Not everybody has helicopter loads of money to sort of throw around.
Well, one thing I will add, there are data quality tools that can help you address that, because if you think about the data quality issues, they kind of fall into detecting anomalies, duplicates, and kind of data inconsistencies. So obviously with lots of regulatory data, you have to address those data flaws. So it's part of that big data strategy that Nidhi we were talking about. And I guess the key part there is picking the right models, whether explainable, and checking those outputs of the like things that are very challenging to address are in fact duplicates in data. Because if you've got a line that has, or a row that has my name, then my address, and both the name, there might be an inconsistency. It could be Sarah or Sarah, and then the address has an inconsistency, maybe my new address and my old address. Then it becomes very difficult to validate which one's right and which one's wrong. So those are some of the challenges and drawbacks. Swati, I know we kind of jumped in and we kind of also added an additional question from the chat, but I didn't know if you had any other drawbacks you wanted to frame or add, or any other notions on data quality you wanted to add.
Yeah, I think I'll go back to Adri's point on trust. I do think there are a lot of development in the industry, right? And companies have started their data strategy from scratch, have built good data warehousing models. So the quality issue is less, it's more of the trust in data. And I think it's the most ethical debate is, right, is AI-powered mechanism more objective than a human being, or actually they are more inherently biased because of the data set you get? So if you have a set of customers from a particular zip code, are you being more biased towards a region or ethnicity? So it's all of those questions. And I think that's where companies need to put a lot of effort and be very, and I think building back to Nidhi's point on strategy, right? So a strong part of all AI strategies needs to be ensuring that you are building inherent trust in your models, and you're using any algorithms you can, any companies who do work on removing the bias from the data you can, to structure it the right way and just get a more objective output than a human if possible. So that's, I think for me, that's the biggest challenge the industry needs to address in the coming year or so.
I'm conscious we're starting to run out of time, so I'm going to maybe see if the audience is still there and still listening. We've got two questions, one on kind of whether driving efficiency, like what's the best ways to drive efficiency and productivity through AI automation, or how to scale up AI from pilot projects to company-wide solutions. So maybe if you fancy us to answer question A, type A. If you fancy question B, type B. And we'll have a look quickly in the chat and see if anyone types A or B. And if not, we'll plow on with question A. So we'll give it like 1 second, just type A or B. And if you have no preference, then we'll carry on and answer question A. And we've got a few coming through. Damn it, I should have done this as a poll. This is quick maths now. Testing my counting skills. All right, so I get the vibe that A is winning. If it quickly changes, so we'll go with A. So panelists, if you want to talk about how best to drive efficiency and productivity through AI automation. Any good examples, and then hopefully we can come back to George's question as well after.
So I'll probably start, and then others can pitch in. AI has got a lot of open source legs to stand on. So if you want to do something efficiently, lesser money, lesser people involved, more impact, go with that. Finding out capabilities of automation, like I said, if something takes fewer human seconds to do something, from going from one point to another point, is a good business case for you to start automation on. You obviously need limited quantity, but good quality data for it to work. One thing I realized while doing some of these efficiency related AI piece of work is you need to know what efficiency are you trying to achieve. And AI is something where you start with something, you might end up solving few more problems or create few more problems. It goes both ways. If you're trying to address an automation efficiency question or productivity gain, I think it's important for you to know in your business, how do you connect the business domain dots. So when I talk about this, let me just speak about knowledge graphs. I think it's a very less explored piece of AI that maybe one can teach themselves about, but knowledge graphs enable companies to incorporate the human expertise for making some of those meaningful decisions and bring context to the applications. So just don't do automation for the heck of doing that automation, but think about it as a long-term gain. The knowledge graph, if you start building on that, will help you find a lot of efficiencies. It will cut down on a lot of cases where you're replicating the same data story or a customer story, and it'll help you assimilate your existing, maybe internal or external data sources very efficiently. It takes time because it works on the underlying data format models, but that closes a lot of gaps when you're working on specifically AI addressing efficiency gains or productivity gains. I don't know what's the view of other two.
Yeah, I think. Go for it.
That's great answer. I will not comment there. Swati, please comment. Also, there are very good questions in the question and answer section, which we might want to tackle later on after this one's answered. Sarah.
Yeah, I just had a point from Simon saying that not everyone could see the question, so we will read out any questions we can raise during the time in between the panelists answering. But I know I can see just one comment from Karen saying, surely design thinking is key first to what you're trying to achieve end to end before using AI, the right tools for the problem. I don't know if I know there was a full-on kind of comment from Nidhi's, but I certainly agree. Yeah, it's important to both scope and carefully design and analyze current as-is processes, and then even think about the future operating model, target operating model. What is the best solution? That's my perspective, and I'm sure some of the panelists have their thoughts and agree. And if you want to go back to the original question, Swati, feel free, because I know we kind of interrupted you there.
No worries. So I think the crisp in financial services is right, finding the balance between customer centricity, regulatory precision, and operational efficiency. That's where all the heat with the regulators, the industry, the banking lies. And that's where I do think AI has found the sweet spot, because by building solutions in fraud detection, and I'm sure Adri would be able to validate, and risk management, right? Those are areas which are operationally very heavy for the companies, and we can save a lot of money on the resources, the number of manual steps you have to take to avoid fraud and the money the company loses in fraud. So it's those kind of examples, right, which have found a solid founding in the financial services. And I do think over time, and it has also shaped, going back to your point, Sarah, the design thinking, how do you integrate AI into your models? What is the right way to place it in? So it's a good example. And I do think it's now going into the other parts with predictive analysis coming in, right, where personal finance management, which is the way banks has brought in more or less, is purely about saying, how do you let user, how do you educate user more to take better budgeting decisions, better spending? How do you use AI to create a better visualization of the user's spending habits so that they can analyze, predict, and spend and earn very customized to themselves?
And I think, there's some really great points raised by the panelists and those in the audience. So thank you for that. We might just pick up on one of the questions raised in the chat. Do you see increased, by George, and do you see increased usage of AI for building risk profiles for unsecured, secured lending for SMEs and consumers? Any panelists want to chip in and answer?
Definitely very strong one. I think in UK, Europe, the adoption is still low. But if you look at emerging economies, right, where financial inclusion is a general problem, where traditional banking doesn't reach the last mile end, but mobile networks have, that's where you can see some phenomenal examples of credit and loans being offered within seconds with the power of AI, Alipay, Paytm, a lot of good examples in India and China of how solutions have been scaled purely on hyper-personalization and AI, and they've achieved really scalable results. And I think the UK market is picking up a lot, and a lot of companies are now investing into, again, coming back to the alternative data points for credit scoring, loans. How do you use that and offer more loans and more customized and loans to the customers?
To answer George Arora, yes, it's coming. So watch the space. AI is making a big forays into building risk profiles, especially for the unsecured and secured lending sector, especially for SMEs, for alternative finance, for funding circles. That layer which lies below the top banking companies, which gives to the customers in that SME range. Yes. A lot of companies and a lot of solid companies are pitching in, and there is existing solution actually already for end-to-end credit risk management, for your own risk appetite profiling, and as an SME lender, when you give it out to your clients, how well you can manage cost effectively, capital efficiently by reducing your risk, reducing your cost, and increasing your revenue. So watch this space, it's coming. That's what I would say.
Adri, any final remarks?
Well, just echoing what you said, the companies predominantly in the Chinese market, I would say Alipay, they have a different operating model, which I'll say digital operating model than some of the other institutions, where they are using essentially digital at the core. It's interesting. I mean, we can go more into what is digital in the core, but they are using AI to really micro cluster for risk segmentation, risk management, and risk, quantification, which is probably not so much heard of in the European banking space or in the Western banking space. The way they are doing it, we are also doing it, but not in the same scale.
So what was really interesting about, with everyone kind of commenting as a kind of a yes, we are seeing an increase in the use of AI for risk profiling for lending and things like that, is obviously then thinking about, well, how is it shaped in the time of COVID? How has this period, which is a very, would be seen as an anomaly, which is now actually becoming the norm, being dealt with in both a data case and then when it's being built into these profiles. Now that is a whole other question in itself. So I worry if I open that question now, I won't be able to allow you to answer the other ones. But what I might do is just jump and read out some of the comments from the audience. One from Tom saying, many of my clients see data-related skills as core to their future, and several have skills of the future programs to upskill staff in automation, analytics, and AI. is there more we should do cross-industry and in secondary, tertiary education to support this? Anyone else want to comment on that comment in the chat?
Yeah, well, I'll add two points. One is the analytic skills that is required to translate ML, AI predictions is not there so much, even in industry and practitioners. And even I have been myself, learning how to do it well. So analytics translation, maybe that could be taught from early years. It really helps. I don't know what you call the course. And the second one is real knowledge about statistics, because you can lie with statistics, you can make things up, you can purposely or not intentionally. So it is at the core, learning how to play with data and understand data through the lens of statistics. If those skills are there, I think we will be doing AI, machine learning well in the future.
Yeah, it's very true. I heard 99% of statistics are incorrect or fictitious. And I'll just quickly look through if there's any other further comments on that. If not, I'll move to the final question, although I'm conscious we are slowly running out of time. How to scale up AI from pilot projects to company-wide solutions. Just to let you know, guys, we're technically over time, so you're going to have to give a 1-minute summary of this very large question.
It has to, you need to have, I'll just quickly take you have to have sponsorship from really top level, because as Nidhi mentioned initially, it's probabilistic. You might not see success as you hope for. Mm-hmm. So some people have to, bite the bullet sometimes. If it isn't there, at least there isn't a understanding that how great it can be or wrong it can be in the outcome, you will kill the project off maybe earlier than you should have. So that's my topmost point, sponsorship.
And just reading the comment from, I think it's Karen, agree with Adri, education is looking at these skills early stages, some great new models coming out of Harvard, statistics, realized, analyzed, and then there are statistics. Swati or Nidhi, any further comments either on the previous point?
You want to pick up projects, and this could be machine learning projects or data science projects, start with data. Once you get a sponsorship, your budget, you start with the data, collect the data suitable for the cause. That's very important. You may or may not need the data scientist capability then, but with your in-house teams, you could. If in-house is sounding to be more time-bearing for you, then go to open source external places where people will do it for a cheaper cost. Then, of course, once you get the data, find the cause, what you're trying to do with the data. Create a model, input, output mapping, train your model, several iterations. It'll take time to come out with what you want to do. It's a long, laborious piece of work. It doesn't happen overnight. Then, of course, very important part, deploy the model for testing with your users. Bring the interference of the new data back into it. Update your model, train it, several iterations. Think of it as a startup. Think of it as something that you absolutely have no idea what you're about to do, but you start from a data story and why you want to find a solution to the problem that you have. Or maybe there is no problem, but you want to find something unique. So go back to your strategy. And this could be either your machine learning project, or it could be your data science project. Now, people generally I don't know how much people understand the difference, but there exists a difference. That in data science, you're collecting, analyzing, and you're creating a hypothesis and reanalyzing the data periodically to come with that hypothesis as to what unique thing you want to do, let's say in this context of the sector of financial services, and then input that information to your machine learning team. You could start small, you could start with as much as 3 people, but that should be your starting point if you want to really start working on something actionable coming out of this piece of work. As I said, it's a labor of love. It takes time. It takes a very strong leadership from the top to sponsor, support, and see you through the end. It commands a lot of iteration. It's beneficial to organize yourself in the habit of working in a scrum where everybody folds up their sleeves and gets their hand dirty. That's my advice.
I think just quickly to add a last touch, I think with Fintechs, it's a little different. I feel that AI is the core of your strategy from the start. So what has happened is organically, customer centricity and using data to make the right decisions, using AI more and more is what everyone is organically trained from the beginning when they're inducted. And so I've seen some brilliant examples from our customer service team, our AML teams coming on, where they have come up with ideas of how do we use AI to service the customers better, to create products in a better way, right? And it's no longer become a product manager or technologist job to think about that. It's just become a very inherent part of how you think, every single person in the company thinks and adopts strategy. So I think that's where big banks, and like what Adri and Nidhi suggested, probably need a lot more work to make it more driven from the leadership perspective so that it becomes ingrained.
Andrew, any final remarks?
No, thanks.
Thank you.
Good answer.
Yeah, I think I totally echo what the comments of the panelists have said, about importance of the data strategy, having buy-in from the top and the bottom of the company, or top and actually employees in the company as well. And equally just making sure the whole kind of data journey and life cycle is addressed throughout, from data capture and storage to data management to data governance and its data ethics as well. Thank you everyone on the chat. I know we probably have a few more questions that we've probably not had time to answer, but I'm just conscious that we're already running 6 minutes over the time. So I'm conscious that I should be handing back to Mark shortly. But I just want to say a massive thank you personally to the panelists, who I thought were exceptional, and also to the audience members who've raised some really brilliant questions throughout. So apologies if we didn't address all of them just due to time. But there's definitely some great follow-up points, and certainly you can add me on LinkedIn, and I'm sure the panelists are happy to be added on LinkedIn and various channels if you want to have any follow-up discussions with them.
Thank you, Sarah. Thanks for being the mediator.
No, you're welcome.
Okay.
Now,
Thank you very much, Sarah. That concludes today's FinTech Friday discussion. Special thanks to Sarah, to Adri, to Nidhi, to Swati, and for their insight this morning. Thanks also to everyone that tuned in and participated. Really appreciate your comments. If you enjoyed today's discussion, then I encourage you to visit Money Next Online Summit conference, which is taking place on August, which is where you hear more discussion just like this. We'll be back here on the 12th of June for the impact of the increasingly cashless society. Enjoy the rest of your Friday. Have a great weekend and enjoy the sunshine. Thanks very much.
thanks everyone.
Thanks,
Thank
everyone.
you.
Bye-bye.
Bye-bye. Thank you all. Thank you.